Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know it's working. Hope everybody's having a fantastic morning. I'm looking forward to trading with you guys today. We've got a lot of stuff lining up right now, so let's go ahead and jump right into it. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. All right, guys. So as far as banker's close goes, I've taken a quick short position here on the Euro franc, and I'll explain this one here. So I've just taken my starter position, on the Euro franc. So I've taken a short. Technically, the pound franc is lining up for a banker's close trade too, so you could short that one if you wanted. One thing I like about this Euro franc over some of these others is if you look at the sentiment index, you'll find that the Euro franc is 70% long and 30% short. So if we can, we'd like to align ourselves with against what the average trader is doing. So that's something that I do like, and it's got a setup for us. So I think this is something we can work with or tango with this afternoon or this morning and kind of go from there. A couple of things too. The seems like this Credit Suisse stuff has settled down just a little bit. There wasn't a ton of movement last night. So I've gone ahead and lifted my ban on franc positions. So that's why you're seeing me in this trade. I also just posted a position. It's this one right here. I just took a market sell on the Aussie franc just a few moments ago. I'm going to explain this trade too in detail, why we took that trade as well. Okay, so but yeah, go ahead and jump into this one. Let's pull up a higher time frame on the Euro franc. Actually, maybe I will do it over here. I'll go jump to a different workspace so we can manage this trade. I don't think the news is up with Credit Suisse. I don't think that's the last we've heard of it for sure. I just think as long as we're managing our risk today, we'll be fine. So, okay. So with this one, yeah, obviously I am looking for shorts, but something to be aware of is, it does look like it's trying. I could make the argument for both directions. Like this is a little bit of a flag pattern. You could see this, send the market even higher. So just be aware of that. So I would look to probably add to this position at some kind of supply zone if I could find it. So I'm not going too heavy on this banker's close trade, just as an FYI, okay? And at the same time, you could make the argument, the argument I'm making is, well, hey, it's making lower lows, right? We're starting to make lower highs, right? Like that's an argument I could also make too. So it could go both ways. And I just like the fact that most traders on this are buying. And so we want to be looking for shorts. My biggest concern is like maybe this market wants to try to go up to here, this area, before it comes down. So I could totally see this come up to here and then plunge lower. So that's on the table, that's on the menu. So I'm just going to move these just out of the way so that if it does come to there, I can work with it. Okay. And since I am widening these stop losses a little bit, I should probably look for an even better target. There's actually some good places you can look for closing. You can close here, and it looks like there's something right here that we could work with. So this is actually not a bad area to close. So we'll move on. We'll move our targets kind of in those areas right here. Between there and there is good. And this is just the banker's close, okay? We've got other trades, which we're going to talk about in just a moment. And for those that are just logging in or watching the recording, again, you're probably like, what are you doing on the Frank, Steve? I thought we said not to do that yesterday. Yeah, yesterday I was flat. I didn't have any positions on the Frank at all. I didn't have anything. So no, I stuck true to that. The thing is, overnight, the effects of the Frank have been very mild, a lot more mild than I expected, which is great because it looks like we can continue to trade the Frank, which is nice as well because the Frank is one of those pairs right now, or one of those currencies that has a lot of setups for us. For example, if you go to the sentiment index, you can see here like the Aussie franc, like Euro franc's also biased. You've got the pound franc, not so much. Let's see, dollar franc, not so much, but franc yen's a little bit biased. You've got the Aussie franc, which is really, really biased right now, which is something we want to trade. And obviously we just got into a position there. And then that one, not so much, but the CAD franc is also extremely biased right now, okay? One of the cool things that's been going on, and this looks like it's doing great, this little trade, this Aussie franc trade. So one of the things that's been going on here is you've got, so this market was coming down, 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 like a ton. It was just coming down for the last several days. And it's been coming down, and then it finally has been starting to go back up. Now, normally when the market starts to go back up, you're going to see a switch, a transition rather, of traders. So you're going to see a lot of retail traders pivot their positions. They're going to exit their long positions and subsequently start going short. We have not seen that exodus yet, or that transition rather. And how do we know this? Because right here you can see that 93% of the traders that have positions on the Aussie franc are still long, and 7% are short. So what that means is, and you guys know the drill at this point, right? That these traders are going to have to exit their positions. These long traders, they're going to have to go short at some point. And they've been in a drawdown for a long time, right? So if you think about the storyline or the timeline of these traders, they've been buying, 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 buying. And this entire time that they've been buying, they've been down on these trades. So here's a unique opportunity for them to exit their position for either a profit or a much smaller loss. And in addition to that, you have people like you and me who are coming in here thinking, well, knowing this and looking to take a profit. So you're going to see an increased selling pressure from the retail traders because they finally found an opportunity to exit their position. And then you're also going to see an increased amount of selling pressure from people like us who know this information, are going to try to take advantage of it. So this is actually lining up pretty dang well. Yeah, pretty darn. And actually, let's kind of talk about some other details. So once you know this piece of information, where you've gone through the sentiment index and you have found the bias and you know where the dumb money is trading, then you can come over to the chart and apply that, right? So you come over here and you go through the 1, 2, 3 step process. And what that looks like is you're saying, okay, great. I need to find a structure point first, and we found structure right here. And you can actually take this back even further. I guess it's not as prominent over here. I mean, you could say that that's structure. I wonder if you can go back even further. But that's about as far as we're going to go. So we can say that this is structure just even based off of what was formed on this little platform right here. So right here, you can see the market formed a low, kind of came up, came back down, formed another low, actually touched a couple of times, and then ultimately broke, right? And so where did that break take place? It took place right here, right? So that's step 2, is finding the break of the structure. And again, that took place there. And then once you have found the break of the structure, the third thing you want to do is go find liquidity or supply or demand, right? And so for us, for me, when I was looking at this, I said, okay, great. It appears that whatever kind of took place kind of right in here is liquidity, okay? Because whatever they did there was the final blow to this market, and the market just kind of collapsed at that point. So that's a liquidity zone. Now, if you're trying to figure out what your liquidity zone is, and you can't really find it with your naked eye, you can always use SonarLab to get some help. So SonarLab's saying that there's some liquidity right in here on an hourly. If you switch around the time frames, a lot of times it'll give you some more insights. So on the 45-minute, they're saying there's 3 different liquidity zones right in there that overlap, which is kind of cool, right in that area. And then, you know, you use a 30-minute chart, and 30 minutes saying there's 2 different liquidity zones right here. And then see what a 15-minute says. 15 minutes even got one. They've got theirs listed a little bit higher. Let's actually go out to a 2-hour. Let's see what a 2-hour says. Yeah, 2 hours got 2 right there. You got 2 of them right there. So definitely liquidity in this area. So I think what's so cool, guys, is we know that these 93% of traders are going to have to exit, right, and go short. And what better place to do it than right here, right? So the probabilities just increase so substantially. And not only what a great place to do it, but it's also a place, you know, we're not in this trade. We're not the losers in this. We haven't been buying for the last couple of days. You know, we've only been looking for sells, and we finally got a really unique opportunity here to get in around this bankers close hour. So we know that there's a flood of selling pressure coming in. And I just love this because you don't always get such a great opportunity. I mean, it happens all the time, but like it's not every, I wouldn't even say it's every day where you get such a great opportunity with something so biased where the market it comes up and they haven't even left their position. That kind of tells you how desperate these buyers are. They're so desperate that they're like, I can't even get out. I have to wait for a higher price. Well, it's going to come back to bite them, because I do believe that I mean, you can see this market basically came right up into this selling zone. And as soon as it got there, it was like, see ya. Right. It was not going to stay up there long. So yeah, that thing's already pretty much taken off. Okay, that is okay, so here's how I want you guys to look for trades when you're not trading with me. Again, you're going to go to the sentiment index, find the really biased currency pairs, and then you're going to look for trade opportunities in the opposite direction of what most people are doing. But you specifically have to go through that 3-step process to find liquidity zones, right? So you find structure first, you find the break, and then you find the mechanism or the liquidity that created the break of structure. And then that's where you're going to associate your trade. That's where you're going to put in your entry. It's going to be a, you know, sniper-like entry. And these are so cool, because if you can get them, you can risk very little. So you can see on my trade that I have set up here, you know, I'm risking 1 unit, and for every 1 unit I'm trying to make almost 4. So it's a 1 to 3.91 reward to risk ratio. And this is what keeps you in business, okay? Because when you're learning to trade, often there's a lot of losing involved, especially at the beginning. And I'm here to help you with that, okay? Because I've been through that so many times. I still take losers. Like, there's no way to get around losers. It's just the cost of running your trading business. You have to have losers. But what's cool is you can mitigate those. You can keep them lower. You don't have to risk the whole pot of money to win. That's gambling. We don't do that. We're very specific, and we have our entry and exit techniques here. So what's cool about this is I can get away with such a tight stop loss. If the trade wins, I can usually get away with this tight stop loss, and I can also get away with such a high reward. Okay. What you don't want to start having is trades where, you know, you're getting to 1-to-1, you know, 1 risk of unit, one unit of risk and then 1 unit of potential profit. You don't want to start having trades like that. You also don't want to see you go upside down, because I've done that many times when I started trading, where I would risk 2 units to make one, or whatever that is. Okay. I mean, I remember several years ago, I presented at a summit in San Francisco, a trading summit. And as I was waiting my turn to present, there were other presenters there. I was standing in the back, and I heard this trader talking to another trader, just some beginning trader, I guess. He said something really interesting, and he was kind of a loudmouth. Like, everybody knew who he was by the end of the summit. And by the end of the week, everybody knew who this guy was. But I remember one thing he said that I just never forgot. He said he was telling this person about his strategy, and he said, if you just have a 2 pip take profit and a 100 pip stop loss, you'll never lose because the stop loss is so far away. And I just wanted to slap my head, because I was just like, oh my gosh, like, what's the whole point of having a stop loss in the first place? It's to protect you. It's part of your business plan. It's part of your technique. If you don't utilize that stop loss and work with it to help you make money, then you're not going to be profitable. So if you're going to just put a 1,000 pip stop loss or 100 pip stop loss on every single trade, and it's just always 100 pips away or more, why use it? Because you're just gambling at that point. In fact, just take it off. Don't even use it if that's going to be your mentality. But I always recommend that you do use one, and that you use it to your advantage. Okay. We put it in places where, for example, with this trade, let's say this trade, it's doing okay right now, but let's say it doesn't work out. Let's say this one goes against us and goes past this liquidity zone. Do I want to stay in this? Probably not. Right. I'd rather cut the loser and just move on if that takes place. Okay. So it's always important to use them, and it's important to use them correctly, because this week I've had some pretty good wins, but I've also had some losers. In fact, you guys can see my order history over here. This is a new FTMO account that I opened just to test a few things out. And this one, you can see all of my wins and losses here. So this is my first couple of trades. I actually was risking 2% on the first 2 trades I took. So, I lost 4 grand here, but then I made almost 5, and then I lost 2 grand, 2 grand loss. Then I made 4 grand, then I made 2 grand, lost 4. This was a trade that I just canceled. Lost 2 grand, but made 5 here. Lost 600, made 1,200. And then I've got this trade that's open right now that we're just waiting on, right? And then I've got my trades from last night that I posted that just haven't triggered, which we'll talk about in a moment. But actually, real quick thing on this. So this trade was open, this account was open a week ago, and it's up almost $5,000. But look, I mean, what's so cool, guys, and this is what I'm trying to show you guys, is when you look at the winners versus the losers, there's a consistency here where, yes, there are losers, and there are a bunch of them, but the winners are bigger than the losers generally, right? And that's how you stay in business. That's how you make profits, is keeping the winners bigger than the losers. Okay. That's how you stay in business. All right. Okay, so we'll let this trade sit and do its thing. There's really nothing else that we need to cover on it. With this one, with our banker's close, I'm just going to let this sit. If this one moves to, these actually moved up on me because they're trailing stops. If this thing moves up into this area, this box area, I might add to the position, just because I do believe that is going to be a supply zone. All right, guys, let's go ahead and talk about some of our other trades that we have open. So we took a couple of trades last night. Let's start with the USD CAD. And let me remove Sonar Lab. Oh, actually, one last thing I wanted to say on the Aussie Franc that I used. So as you guys know, obviously you have your 3-step process to kind of get into the trade and find a good trade setup. And then you can use Sonar Lab to kind of verify that that actually is or isn't a supplier demand zone. So that's kind of a nice help, right? And it's free. The other thing you can use on here is you can go to, I think I've shown this to you guys before. If you go to indicators and search fixed range volume profile, volume profiles are great, but I really love this one. Just click on it and then exit out. Click at the top of the range and then go all the way to the bottom of the range right here. And then it's going to pull up a volume profile. So what this means is it's counting all the trades or all the orders that have taken place at these different zones. And that's not only going to, it's going to show you not necessarily supply and demand, but it's showing you the volume that's kind of hidden in there, that's taken place in those zones, right? So we know that this area, in fact, out of this entire market that you're looking at here, this area with this big long rod that comes out, that's the most volume associated with this market that you can see on an hourly chart. So over the last 2 to 3 weeks, this is the most common area where the most transactions took place. We're right here. And it just so happens to be right here in the middle of a supply zone, right? This is a perfect trade, in my opinion. I'd be very sad if this one lost because this one has like everything you'd want. It's pretty much all there. It's funny though, because I've had trades where, you know, it all looks perfect and they still end up losing. And then some that I'm like, this one looks okay. And it's like one of the best trades you take, right? So for me, at this point, I just trade my plan, and then, you know, where the cards fall, they fall. But just I can say whether if this trade loses, that's not going to change how I trade tomorrow. If this trade wins a lot and blows past my take profit and I make all this money and could have made even more, I'm not changing what I'm doing. I'm just going to keep doing what I do every single day, right? But anyway, last little thing is I was just going to show you, you can use this as extra help as well. This is another tool that a lot of really good traders that I know use, including myself. It's just called a volume profile. So if you use this in conjunction with order blocks, it can be very, very useful. And so you can also see, you know, I'm targeting down here where there's a lot of volume too, but see, a lot of people probably were tempted to sell in this area right here when it came up, but we didn't, which is fortunate because there's no volume there. There's nothing, there's no order blocks, there's no volume there. To me, it's a fake area. It's totally fake. So you want to use, I think for me personally, I like to go through my 3-step process because it works. It absolutely works. I've had a lot of success with my 3-step process. But then after you go through the 3-step process, why not use these as well to get confirmation, right? Okay. All right, so that's a very useful tool. All right, let's go run over to say like the USD CAD and let's see how that one is doing. So we set up an order last night that so far hasn't triggered, but let's kind of break this one down. So first of all, before you even go through the 3-step process, if you go to the sentiment index, you'll find the USD CAD. It's somewhere in here. I guess you can just do a Control F and search for it. USD CAD. There it is. Okay. USD CAD right here. So you'll find, yeah, so this is 81% short, 19% long by retail traders. So that's actually a pretty big bias, right? Pretty strong bias. So if most people are short, we want to look for longs because we know that at some point these people that are short are going to have to go long because they're going to have to close their short position. And how do you close a short position? You have to cover. You have to cover your short. And covering is the same exact thing as just buying. Okay, so when you're going to close out a sell, you're just essentially buying, right? So we know that buying pressure's got to come back into the USD CAD, and it's actually happening before our eyes right now. So it's funny because this thing shot up yesterday right here, and we wanted to buy it 2 nights ago. And it actually just never came down low enough to my entry, which I had like right here. This was a nice liquidity zone right in here. And I wanted to buy right in here, but it never got even low enough to trigger me into a buy. People just sent it right back up too quickly before I could get to it, or before we could get to it. I guess kind of the same thing's happening again now. So this is another really solid liquidity zone. And, if the market were to dip into here, this would be a great buying opportunity. And so now that we know that 81% of traders are short, and these guys are going to have to cover at some point, we want to find places where that cover is most likely to take place, right? So you go through my 3-step model to figure this out. So you're going to go find structure, right? I've drawn this out for you right here. This is definitely a structure zone. Structure can be support, and it can also be resistance. In fact, it's best if it's both. It's kind of nice if it's both. So you can see it touches here, touches here, touches here, touches right through here, and then kind of skims right through here too. And then the market broke that structure right here. Okay, so that's where it broke. That's step 2. And then step 3 is you want to find the liquidity that created that breakout. And it's down here, right? This is the liquidity. And if you're not sure that you drew your liquidity out correctly, just use SonarLab, right? So SonarLab's saying that there's something right there. That makes sense on an hourly. Let's see what the other time frames say. 45 says that. How about a 30-minute? They're actually saying it's maybe even a little bit higher. So we may consider bringing that up. Let's see, what does a 15-minute say? 15-minute that actually doesn't have one in there, which is interesting. How about a 2-hour? 2 hours about what we've got, and that makes more sense. Okay, to me it does. The higher time frame makes more sense. Yeah, 3 hours says right through here too. So yeah, I think we got the right demand area right here. So that's what I'm going to go with. So I'm probably just going to leave what I've done. I like it. And then I guess another thing you can do is use the volume profile. So if you just searched fixed in the indicators, the first one that comes up is this one, the fixed range volume profile. You click that, you'll go from the bottom of the range to the top of the range, and then boom, it's going to give you a volume profile. This is interesting though. Okay, I did not see this part. Okay, this is good to see. If you extend this out, there's actually not a lot of volume in this area. So I am glad I checked this out. Okay, so it's actually saying that the volume is really right here, which is also a liquidity zone. Like if you use SonarLab, they're saying that there's definitely demand right in there, institutional demands, which there is right here too, but this is really interesting. So I wonder if we should, that is actually not a lot of demand at all. Let me try drawing this thing out differently. So I've got it set up right there. Let me delete this because sometimes it can be messed up. Let's go draw it one more time. Let's go from here to here and see what we come up with. Okay, it's still not a ton. Like I'm not seeing a ton of volume in that area. So I think it looks good, but I think the real volume is going to be probably down here in this original area. Okay, let me delete this and redraw it. Fixed. So yeah, let's go. Yeah, I'll just go from the bottom of the range to the top of the range. That's where it is. That's where the volume's at. Okay, well, I think that should be the trade then. Instead, I might just adjust our entry. Yeah, I could actually see us getting burned, actually. I could see the market coming down and burning us on this. and then coming into here and then going right back up. So that's just something I think is worth really considering, guys. So what I would do instead is here, let's delete all this stuff. I got a lot of stuff in here. This is the area where the volume is. And honestly, I'm just going to take this whole thing right here. This is where the liquidity is. Maybe I'll even try to tighten this up like that. Okay. I mean, ideally, I can tighten it to that even. Something like that, I think, would be the best thing to do. Let me use that volume profile one more time. This might be the way to do it instead. Yeah, okay, that's the area. Yeah, that's what we want. This right here. And then, yeah, if you use Sonar Lab's saying this, we've got that. Those two, there's two in there on an hourly. How about a 2 hour? They're actually saying there's some even below it. Let's see. There's demand below there too, but this seems to be the real area. How about a 4 hour? Okay, interesting. Sonar Lab's not a perfect indicator. Well, nothing's a perfect indicator. I just think it's a useful indicator on top of your own analysis. But I really like this because you're capturing the majority of the volume in a very small area, which keeps your stop loss tighter. Again, which keeps you in business, right? Keeps you in business. The tighter you can keep that stop loss, right? So I think the way I've got this set up is good. Plus, if you were to ask yourself, you know, where do most people have their stop losses? Probably just below this, that pivot low, and which is perfect because that's where the liquidity is going to be. So everyone's going to get stopped out just as we're about to enter right in here. So I think I'm going to adjust the trade to this instead. But yeah, if you go through the 3-step process, you know, you can even go through the one we did the other day where it's like, okay, this is the structure right here. This is structure. And you can see that that structure is right here. And you can see it's right here. And you can see the market came and touched that structure again. It never got to liquidity, but it touched the structure and went back up. It still hasn't tapped into this area. So this is an untapped, imbalanced liquidity zone, which if you can be the first person to that, you're going to do really, really well. If you can be the first person to this liquidity. So I'm thinking something like this, where, you know, you enter right here and then you'll stop out something like this, and then you'll ride this up again, something like that. This would probably be the way you want to do it. Yeah, it's an untapped liquidity zone right here. So as long as the sentiment index stays pretty biased, you know, with most people shorting by the time it gets down to here, then yeah, let's continue with this trade. But I think that's what I'm going to do, is just kind of amend how we do this. I'm going to maybe send out an alert just to update that trade we sent out yesterday that never triggered, and just say, hey, let's stick with this entry right here instead of this one. And yeah, that volume profile really came in clutch because there is really nothing in there. I don't see why the market would come and pause right there in the future, since we know that there's no volume right in here. Like, it's very dry. So, and it also makes sense because a lot of people probably have their stop losses just below this. So this is probably the best area to do it right here. Okay, so that's a good update. I will make that update, post that for everybody to take a look at. By the way, when you're doing this, here's how I manage the trade. So if I get a signal, if I were you and I got a signal like this is what I would do, because this is what I do when I take these trades. So if this is the signal, I look at this USD CAD and I say, okay, Steve's got an entry here. and his stop loss is going to be, 55 or 56 pips. Then what I do is I head over to the position calculator. Okay. So I plug in the USD CAD and I say, okay, this is the trade I'm taking. USD CAD, where did it go? Somewhere in here. There it is. And then I've got a $200,000 account and I'm risking 1% of my account because that's what's written in my business plan is 1% per trade. And I'm risking 56 pips. And then I click calculate, and this is going to tell me exactly what lot size to use right there. So I would plug into MT4. In fact, I'm actually just going to reset this trade right now. So here's how I would do this. So I come over here. Oops, let me come over here. Once I get that pulled up again, it's 4.91 contracts. Okay, so I'm going to go ahead and cancel my USD CAD pending order. And then I'm going to hit new order. And I'm just going to pull this over here for you guys to see. And then what I always forgot, I already forgot 4.91. Okay. Apologize. 4.91. Okay. And then we grab this. So here's what I would do. I would say, okay, well, Steve's recommending a stop loss, which is right here. After I put in the 4.91, and he's going to say 1.35. 782 is his stop loss. And his take profit is up here, 1.38352, 1.38352. Okay, perfect. We know this is a pending order, so we're going to click pending, and it's a buy limit. So I'm going to go ahead and click buy limit. Okay, and Steve's going to buy at 1.36. It's right here, 1.36346. 1.36346. And then you can just double check to make sure you got everything right. Yep, that's the lot size I want to trade because I already went through that analysis. Here's the stop loss I want to use. Here's the take profit I want to use. It's a pending order, buy limit. Except this is supposed to be the USD CAD. I'm glad I double checked. There we go. Okay, so I'm gonna have to do this again. I just realized it was stuck on the Aussie franc because I'm still pulled up over there. So I'm gonna go ahead and reset this again. Apologize. Okay, so stop loss is 1.35782, and then take profit is gonna be 1.38352, and then buy limit at 1.36346. Okay, now you double check everything to make sure you got it right. It is the USD CAD with this contract, with this stop loss, this take profit. It's a pending buy limit at this price, and then you go ahead and click place, and then you'll be ready to go. So now if you look at my chart, let me pull this up here for you guys to see. You can see I've got that trade ready to go right here. So I've just updated that trade to our analysis that we just did. And it will take a while to trigger. Like this is probably going to take, I suspect this is probably going to pull back at some point. When it does, it's going to happen quickly, and then we'll be like, wow, that was quick. But it's not going to happen this afternoon. It may not even happen tonight. But that's the thing about these trades, guys. If you can just snag even just 3 or 4, even just 2 or 3 really solid trades a week, that would cover any losses you have, and it'll leave you with profits by the end of the week, like a good amount of profit. Okay. So you're just setting these up and having them ready to go. I think I've mentioned this before, but I want to bring this up because it's appropriate now. Most of the time when traders trade, they just grab their cup of coffee and they just go to the computer in their pajamas and they just start placing orders. And guys, it doesn't work that way. I know everyone likes to and wants to trade that way, but the best way to trade is to be strategic and have these levels ready to go. I mean, you've seen so many different trades that we've taken in the last couple of weeks where we've said, hey, this was the very best candlestick to buy on in the entire, last 72 hours. So, what's the chances of you in your pajamas coming to the computer and grabbing that very best candlestick. Not likely. I mean, you could be asleep, you could be away from the computer, you could be whatever. You could, maybe you're not even paying attention to that pair or whatever. So you have to have these trades ready to go beforehand so you can take advantage of such great levels. Otherwise, you're just going to miss it, right? So that's my 2 cents, I guess, on trading successfully, is just making sure that you've got these pending orders ready to go and just be ready. Okay. So I do like this one for a buy limit right here. I am super glad we took a look at this volume profile, because this is probably a big trap, actually, come to think of it. I mean, it's the right idea, but there's just not enough volume to justify a move back to the upside if you don't have some volume right here. The platform's not great enough. So you need a platform like this one down here, where if you were to return back to that price, there's a good chance you'll get the move you're looking for, right? Okay, so there's that trade. The other trade we have open is this, I think it's this euro pound. Is that right? Okay, so this trade was very interesting. And actually it's pretty much over. We could probably cancel this one, but let's talk about it first. Let me delete this. This volume profile, by the way, will continue to every chart you pull up unless you click on it and close it and delete, and then it'll go away. So last night, this market was down in here, I think. In fact, let me see if I can find the signal that I posted. Yeah, it's right here. Let me pull it over for you guys to see. Here's the trade I posted. I was looking for a sell if the market could come back up into here, and then we would sell and look for it to just plummet at that point. So we had the right idea, it just never triggered. It got really, really close right here, and then it came down. So the reason why we took this trade always stems back to, going back to that sentiment index, right? So if you go to the sentiment index, you'll find the euro pound somewhere here in here. Here it is. And you'll see that most people are buyers. So we want to look for shorts. And I think even yesterday, it was even more biased. Okay, it was extremely biased. I think maybe even up in the 80s, but it's still biased, right? But yesterday it looked even better. So you're just looking for an opportunity to short this because most people are buying. So that's all you need to know here. Okay, so now you go back over to the chart, and this is where the market was last night. It was down here. And I said, great, let's go through that 1, 2, 3 step analysis. So step one is to find structure. Okay, here it is right here. I've circled the different structure points that I'm using all throughout here. In fact, I think this one just keeps on going. Like it's used quite a bit. Like even back here, it was used. It's very much a structure point, right? And it's had its breaks up and it's had its breaks down throughout the past, but it just keeps on being used, and that's fine. There's nothing wrong with the structure point being used multiple times. You just have to find it. That's all I'm asking you to do, is just find structure. And then the next thing you want to do is find where it broke most recently, okay, which is right here. Okay, so it broke right there, definitely broke right there. And now you're trying to find, well, who caused it? That's step 3, is the mechanism or whatever created that break of structure. And it's definitely this, right? Whatever orders took place in these 5 or 6 candlesticks right in here is what ultimately led to its pull to the downside. So, and if you use SonarLab, you can see it's totally there, right? You've definitely got this right here. If you use a 15-minute chart, it's saying the same thing about the same thing. Let's do a 30-minute chart. 30 minutes got tons of supply right in here, tons of it, right? Okay. Then you go back to an hourly, which is the one I use. And I was like, yep, that's definitely it. And you could have used this area too, but to me, I was thinking, well, but this is what created it. So I'm just going to use this and keep things kind of tight, because the tighter you can keep that stop loss and that trade wins, the bigger the profits you're going to get, right? The much bigger profits. Yeah, I was really hoping, because man, if had this one triggered, oh man, I'd be up like 8 grand right now, because I was only risking 2 grand between here and here. 2 grand between here and here. So you'd be up like 8 grand right now. So it kind of stinks, especially knowing that I was last night about 7 pips away, maybe 8 pips away from triggering, but it happens. It totally happens, guys. And it's just, I'm not about ready to compromise my strategy because of this instance where, yeah, I obviously we were on to something last night. It would have been really nice to have triggered into that like pump and dump that happened last night. That would have been really, really nice. But again, I'm not about ready to just change the strategy. Now, so you went through the 3-step process that I've created. And then the second thing you can do beyond that is just find confirmation with Sonar Lab. And then I guess another thing you can do after you've done this is you can use the fixed volume profile. And actually, let's see, maybe that could have helped us a little bit more last night. And yeah, just kind of draw it up from the pivot down to just a pivot to a pivot. And yeah, actually, they are saying that there was a little bit of volume right here. So maybe that's something to have considered, that maybe this area could have been a good selling area. Maybe. But I'm not about ready to change my strategy for that just one instance, though. And as you can see, this was the area that was gold. If you could get it to right here, that's just gold, man. Total gold. That's where the biggest bars are. And it's also where supply is, and it's also through your 3-step method. It's all supply, right? Sonolab saying the same thing. Fixed volume profile saying there's a lot of supply there. That was the area that we wanted to sell at. So, okay. So what do we do with this trade? I think at this point we just cancel it because it never triggered. And yeah, it could still be good. I mean, you could keep it, maybe. My only concern is now the sentiment index is only at 71%, whereas last night I think it was up in the 80s. So by the time the market actually gets back up into this area right here, it may not even be a really good setup. Just a thought, right? Just a thought. But dang, that stinks. 7 or 8 pips away. It's the difference between making 8 grand or making nothing. Oh my gosh. Oh, that's frustrating. Oh man. And you can see we'd be just on the cusps of our take profit right now. That's really rough. Okay. Well, at least it's not a loser, right? Like, that would stink to have a loser, but we didn't even take a loser, so that's fine. So I'm going to go ahead and probably remove all that stuff. Is it worth keeping? No, it's not worth. I'm going to let's just move on to the next one. Okay, right? We got other trades we can take. So I'm just going to cancel the euro pound. So what we've done so far is cancel the euro pound because it never triggered. Today we took that Aussie franc short, which I'm up 350 bucks on right now. We'll just let that continue. And then we got the USD CAD buy limit that we've adjusted. So I'll make all these updates in Telegram as well, so everybody can see. And then I guess I just wanted to see the other trade that we took this one yesterday, and we canceled it. Do you guys remember this? This is the one I canceled because of the Credit Suisse. Looks like we would just be barely profitable. It hasn't done really anything. We'd be barely profitable on this one right now. But it was a good liquidity zone, right? Like we called this one pretty well. It's the same thing, same concept, right? So minus Credit Suisse, let's talk about this trade. So if you're just going off of pure price action, let's talk about why this was a good one. So it's the same thing, three-step process. You're looking for a break of structure. Here's the break, and then here's the liquidity zone that created it. And I did include this entire area because to me, this whole area was an imbalance, and you can check that out here on Sonar Lab. It had supply zones, tons of them right up here too. So I was like, it might be a trap just to include only this area. So I included Sonar Lab was including this area too significantly on an hourly chart. So I said, okay, I probably should include this whole box, right? And I think that was a smart decision because you can see, this thing did go up here pretty close to the stop loss actually, and then pulled back. Now, could you stay in this trade? At this point, take a look at sentiment. It's totally flipped. It's like 50-50 now. So if you look at the NZD franc, yeah, it's 56.44. We would not even consider that as a trade opportunity at 56.44, as far as retail sentiment. So we would be out of this trade anyways. Maybe we would have made a little bit more money had we closed out down here or hedged half of our position at this point. But yeah, overall it was a good-ish trade. We found the right zone for sells. Like obviously it was a smart idea to be looking for sells in this area, but I probably wouldn't keep selling this one. Probably wouldn't buy or sell. It's just a no trade at this point. Okay, so but as far as other trades we're looking for setups on, this afternoon and this evening, I will look for some more setups on. Obviously, the Aussie franc is a great trade. We just need to stay in that one. It is a really great trade in my opinion. It's got everything you'd want to see. And then you've got this, let's see, which is that CAD franc's actually a good one too. So if we can find a setup over here on the CAD franc, because it's biased 92.8, 92% of people are buying, 8% are selling. That's a good one. So here it is, CAD franc. So looking for sells on here would be good. My only problem with this one is I just don't have a lot of structures to work with, right? So when I'm looking at this one, obviously we want to sell. You could argue that this is some structure right here, and so far it's liked that. But the liquidity that created that break of structure, in my opinion, is really like right here. And it looks like it may have gotten close to tapping in, maybe not quite. Maybe include that too. Let's see what SonarLab says. Okay, SonarLab it likes this area right here. So maybe something like if you were to sell this is not my favorite one. I like the Aussie franc a lot more than this one, but you could do this one in addition. This would be kind of your area. That'd be a really good area to sell at right there, especially considering how many retail traders are buying right now. Super biased, right? It's 92.8. That's a lot, guys. That's crazy. Look at this. If you look at the numbers on here, there's 21,000 positions to the long side and only 1,400 to the short side. 31 or almost 3,200 contracts long and only 272 contracts short. We'll see. I think they're going to get trapped. I really think they're going to get trapped here in the next 24 or 48 hours. I really do. Same thing with our trade on the Aussie franc. It's even worse over here. Look at this. Yeah, you've got why so many more positions though? That's my question. Why so many more? 21,000 positions long on the CAD franc. That makes it sound like there's somebody or a couple of people who have just got lots of tiny orders, lots of tiny positions. We'll see though. This one's exactly what you'd want to see too. It's got 181 contracts short, which to me is hardly anything. And then long, you've got 2475, 25, basically 2,500 contracts long. I think they're going to get trapped. I really do. I think these guys are going to just get trapped here. As long as Credit Suisse doesn't do anything crazy today, we'll be fine. Which again, that's why we have stop losses. So again, this trade, even though it's got everything I'd want, it's literally got everything I want to see. It's exactly what I would want in a trade. But you know, even the best trades can lose. I'm just trying to make you guys aware of that. You guys know the drill. But again, even if my trade were to lose, I'm not about ready to change my strategy. So it's just important to remember that. And it's made some improvement here too. Now I'm up on our Aussie franc short, up, you know, $600, but we're going for a lot more on this trade. Like if this trade wins, it's actually going to be very similar to the other ones. Like this one, yeah, this one's almost 4-1. So if I can get this one to really run down into here again, yeah, you know, I'll end up making about 8 grand on this trade. And then if it loses, you know, it's already set to 2 grand. All right. And then as far as my banker's close trade goes, I'm just holding it. I'm just doing the same thing. It hasn't done much. It's gone up a little bit, and I'm just waiting for it to maybe come up into this area. If it comes up into that area, I might sell a little bit more for my BC trade, but otherwise I'm just waiting. I'm just waiting on it. But what you will see from me later is I'm going to update everybody on the USD CAD. We updated that position, and then we canceled our Euro pound trade that just never triggered. So, all right, guys. Well, I really appreciate your attendance today. Thank you for coming, and we will see you in the next webinar.